Hey everyone, welcome to another exciting, jam-packed finance bootcamp video. Today we've got something really special going. Today we've got two of the top dogs, Yashin and Guy from Sanlam Private Wealth, and we're talking about investing offshores. I know all of us really want to get our money into dollars, dollar accounts, have our capital grow in dollar terms. And these guys are top of the food chain when it gets to this. They know about the structures, they know about the most cost-effective way of doing things. And as we accumulate your wealth and we grow, they can help guide us into what the best decision is to make next. So it's irrelevant if we're just starting out with our cash pool, building the emergency fund, or if we're at the stage where we've already invested a couple of million into a retirement annuity or free cash, or what we spoke about the other day is quite a big, what happens if you come into some money through whatever reason. Maybe you won the lotto, maybe someone passed away and was kind enough to leave you in their will. But what do we do growing and preserving cash? And these guys are really good, and they know what they're talking about. Obviously, being backed by a massive company like Sanlam Private Wealth, which is really truly a global player in this space. It's guys I trust, it's guys that I know that can give you great value, and I'm looking forward to hearing and learning a lot from them today. I'm sure you are as well. Gentlemen, thank you very much for joining me. It's always amazing spending some time with you. Thanks for taking time out to do this. I know how hectic you guys are. I mean, getting 20 minutes with you feels like winning the lotto and that little bit of windfall. Guy, Yash, thanks, guys. Take it away. We want to hear what you have to say.
Cheers. Thank you very much for that warm introduction, Frans. And I too, I wish I could win the lottery at some stage. There's my mugshot, along with my credentials in terms of what I've done. Yash and I refer to investing as close on combat. It certainly can be difficult out there. This is my 26th year in close on combat.
Thanks for that lovely introduction, Frans, and a big warm welcome to everybody to this podcast. My name is Yash. I'm a partner of Guy Allen and a portfolio manager at Sanlam Private Wealth. So alongside him, he's obviously the one with the grey hair, but I do have about 8 years behind me at Sanlam Private Wealth, and we are here, to really take you through things and ensure, that your funds are being invested in the best possible way. So let's take it away.
Thanks, guys. So I think the number one question, and maybe I just want to jump into it and go straight to the throat, because none of us want to sit through another 45-minute boring finance presentation that we don't really understand, right? I mean, guys like us deal with it every day. We get it. Sometimes the numbers are interesting, but I think for my general client and captain circle, maybe not so much. So here's the overarching two things. Firstly, you are a pilot flying at Emirates, earning good money. Your entire idea of going there was to accumulate wealth. You don't want to bring it back into South Africa necessarily. You want to park it offshore or keep it, or hard currency swap it to dollars. That's the one. And then the second one is you are a local South African pilot flying for SAF, SMA, any of the guys. You talk about, you really want to do the same thing. You really want to be building your wealth offshore. I think those, for me, if we can answer those two questions, we've succeeded in today's message.
Okay, perfect. Got you, Frans. And
Thanks, Frans.
That's exactly what we're aiming to touch base on for you guys today. So what we'll do is, in terms of Sanlam Private Wealth, we just want to do a quick introduction. So Sanlam Private Wealth is, one of the largest wealth management companies in South Africa. We're dealing with a team of 70 of the best portfolio managers across the nation. And we have a very strong, performance track record. And what's great about us is that you have a personal portfolio manager that is managing your wealth and stands by your side. So in this case, Guy and myself would work alongside Frans and really build and manage your affairs together.
Cheers. Thank you for that, Yash. And then just having a look at what are the products and services we offer. I won't go through everything here. What I will point out, which I think is important. So the first thing is with regards to worldwide portfolios. I think around about 80% of every rand that comes into our business is actually going offshore nowadays and has been for some time. So huge appetite around that. Then lastly, well, not lastly, but on the right-hand side, equity-backed finance. The fantastic thing that we can offer you there is if you're investing and you've grown your portfolio and you would like to use those assets to pledge as collateral to take a loan against, you can do that. Turnaround time is extremely quick. Then the last point there with regards to fiduciary and tax, we have offices internationally. Our big office would be out of Mauritius. We've got 60 people on the ground there. So if you have any questions around international walls and trust and that, please reach out to France and the team.
Okay, great stuff. So what we want to do for you guys is we just want to set the scene. Now, what we mean by that is we just want to take you through why it's so important, to actually be investing and to, let these investments grow over time. So what the slide shows is it's basically just the various asset classes and the returns that they've produced over time. So you'll see more towards your right, you'll see the returns that have been produced on an annualized basis over 5, 10, 20, 50, and the like, right? Please note that these returns are after inflation. So what we're really trying to achieve is long-term growth and beating inflation over time. Now, what this chart really illustrates is that in order to grow and maximize your wealth over the long term, you need to own businesses. Now, what we mean by that is you either have a business that you own or that you've purchased. If that's not where you're going, then you need to own a share in a business. And that's where we really come in. So if you have a look, what we'll do is 94 years seems a bit long, so let's rather look at 50. Over the past 50 years, SA equities would have produced, about 7% annualized over the past 50 years. But where we really want to take your attention to and what this podcast really is about, is investing in international businesses. And that's where we sit. International businesses in South African rands has produced 8% after inflation over the past 50 years. And I think that's really, why we're placing such importance on this asset class and why we're trying to get you exposure to it at the earliest possible time.
And just to punch in there, I mean, if you look at, if you go back to that slide, if you look at what the markets have been doing the last couple of years, I know 2015, 14 is not in there, but we've been shooting the lights out, and I think that's just maybe goes to say again that time in the market is better than timing the market, right? And
Exactly.
I've also seen some pretty good stats. It was one of the big universities, probably like Harvard or one of the big financial universities, that was talking about dollar cost averaging. And I mean, we all know dollar cost averaging really means, you got $1 million. Do we pump the whole thing in and buy shares, or do we, do 200,000 a month for 5 months? And interestingly enough, I'll share it in the email that goes out with this. But interestingly enough, it's actually showed that 64 or 65% of the time, it's still better just to buy one shot, right? And that's interesting because that's counterproductive. That's like kind of goes against what I've been taught to do. Anyway, I think we could do a 50-minute podcast just on that topic.
No, you're exactly right, Franz. And I think the point to make there.
Sorry, yeah, just the last thing on this slide here is with regards to why you would want to look at owning international businesses versus businesses that are listed on the JSE. The JSE, for example, makes up 0.3% of the international markets of that. So certainly a small market, and you want to be buying the best opportunities that you can. So the likes of Nvidia, Microsoft, Google, Tesla, the list goes on.
Correct.
And then Yash, I'll take over on this slide here. So what Yash was showing you beforehand is the percentages. And I think, percentages, when you look at it, quite difficult to actually go and say, well, what does it actually mean? So what we've put together here is we've said, if you've invested R1, what is your money worth after inflation? So what this is comparing here is, and let's use the first line as an example. If we're looking at SA equities, and I'll draw your attention to the 5-year number, if you invested R1, your R1 is worth R1.18. And that is stripping out inflation. So what that means is you can compare your R1 today versus what it was 5 years ago. So you've turned R1 into R1.18. That accounts for inflation. And let's have a look at the 20-year numbers, and let's go through each of the asset classes really quickly with a focus on why you want to own businesses. So SA businesses, over the last 20 years, if you own them, you've turned your R1 into R3.50. So an extremely good outcome. If we look at that relative to cash over the last 20 years, your R1 is worth R1.35. So you've literally made 35 cents. And that is the power of why you want to be owning businesses. And if you think about businesses, if you worried about inflation going up on your medical scheme or your bank fees and that, own a bank. If you're worried about petrol prices, own a business that produces and manufactures petrol. And then global
Just look
equities.
at that global equity. I was just going to say, like,
Yeah.
moonshot.
Yeah.
Like global equities, your R1 today is worth R6, almost R6.15. And that really is the power there. And over the longer term, over the 94 years, your R1 would have become close on R1,000. Whereas if you left it in cash, your R1 would literally have just become R2. So yes, you know, we talk about cash. Cash at certain points can be attractive if you literally just want and need cash for an opportunity, or you're sitting and you want to do a transaction. Outside of that, please deploy your cash and start making it work for you. And then I think last point here is gold has been on a run. So yes, if we can go back, gold has been on quite a strong run. It's a very cyclical asset class. So you do need to bear in mind is that you can go through a period of 10 years where you don't have any performance. And then next thing it takes off. But gold has been a strong diversifier. It's what's referred to as a real asset, protects you against currency weakness and fiat. So that's all currencies. And gold over the last 20 years, R1 invested in gold is worth R6.85 and actually outperforming global equity. So that too has been a strong performer.
Okay, perfect. Thank you for that, Guy. And what we want to do here is we want to illustrate, you know, what the impact of inflation over time is. So this chart essentially illustrates, okay, if we had 10,000 Rand today, right? If we had an inflation rate of 3% a year, what would that same 10,000 Rand be worth in 30 years' time, i.e. in 2053? Now, I mean, if we look at this, a 10% inflation, I mean, a 3% inflation rate would lead to 10,000 Rand being eroded to 4,120 Rand over a 30-year period. That is a big erosion, and that's with a 3% rate. You know, if we have to bring it to something that's a little bit more reasonable, if we illustrate that in South Africa, you know, we've had an average inflation rate of about 5.25% over quite a decent period. You know, the 6% number is something that we're more or less looking at. And if we look at 6%, that same 10,000 Rand over 30 years is essentially worth 1,740. And that shows, you know, just the amount of erosion that is actually taking place. So that is why it is so important, you know, to make sure that the assets that you're dealing with, you know, are growing faster than inflation to maintain this purchasing power. Because there's no point growing funds in nominal terms, but inflation growing faster than. Because what you're then doing is you're losing funds in terms of purchasing power.
I want to give a practical
and
example.
that's really key.
Because nominal, you know, for a lot of us doesn't mean anything. So practical example is if you do nothing with your money, that's what happens with the buying power of it. So, you know, you had 10,000 Rand and you could buy 10,000 Rand stuff with it in 2023. That 10,000 Rand, it'll still be 10,000 Rand, the number. But in, 2053, you can only buy 754 Rands worth of stuff with it. And so that leads into so many different things. Like it leads into, you know, purchasing of the new car versus investing. So So let's say you've purchased that car and it's devalued 50% in only 5 years. I mean, this is a long period of time, but let's say it's devalued 50% in 5 years. Actually, what's happened is instead of investing that 10,000 Rand, which is, the car, you're going to have half of that. So, you're going to have 754 Rands worth of buying power. You can have like 300 Rands worth of buying power. So it just compounds so quickly if you don't put your money to work, right? And you're just wasting it on luxury stuff.
Yep, 100%. And I think this slide essentially illustrates that, right? So the chart is showing you, what the figure would be worth, but then I decided, let's actually show you in real terms what this looks like. So let's take a Spur burger, for example, something that we all love and enjoy. In the 1970s, a Spur burger would have costed you 30 cents. It's unbelievable to actually think that that's what the price was, but, that is actually where things stood. Today, for that same burger, you're paying about 113 bucks. And I think that's just a simple illustration of how much prices have actually gone up. A steak from 50 cents to 224. A simple coffee, used to cost 25 cents. So it really illustrates that, inflation is the silent killer, that if not taken care of, will erode your wealth over time. I mean, I remember back in my day, when we used to go out, I could take 100 Rand out on a Friday night, and it would be more than enough to take me through the evening. At this point in time, 100 Rand you'd be lucky to even buy dinner with. So inflation really is something that needs to be taken care of. And on the right hand side, what we illustrate is that if we're averaging an inflation rate of 5.4% a year, right? And we say that, okay, if we had to spend 1,000 Rand today, what would it have cost us to spend that same 1,000 Rand 10 years ago? So as an illustration, we go to Woolies, we do our weekly grocery shop, we spend 1,000 Rand today. 10 years ago, if I did that same grocery shop, it would have cost me 600 bucks. 20 years ago, it would have cost me 340 Rand. So prices are really increasing at a strong rate, and we really need to be careful and take care that our purchasing power is not being eroded over time.
Thanks for that, Jash. And just in closing on that, the luxury of having stock exchanges and markets is a stock exchange and a market, a simpler place where you can actually come and buy a share into a business. And our solution here is to enable you to be the beneficiary of those price increases and inflation. And this year, the solution that we have put together, it is cost effective. We'll buy you a global basket of the best businesses in the world. And in the background, we have also chatted to our head of fiduciary and tax. And this solution ensures that you are not exposed to international estate duty. Therefore, we'll domicile and structure this out of Ireland. They're nice. They've positioned themselves as a country as a nice financial center. And these ETFs are extremely liquid. We can trade and we can buy and sell them at any point. But the intention of this is we will buy this with the aim of holding it to grow your wealth and compound it over time. Thanks, Yash. We can move on to the next slide.
Perfect. So what I want to illustrate here is this is what a retirement portfolio would look like. Now, what I mean by retirement is when allocating to a preservation fund or a retirement annuity, we have to adhere to something called Regulation 28. Now, in simple terms, what Regulation 28 means is that within our retirement portfolios, we can have a maximum offshore allocation of 45%.
So this is, just to clarify, this is for all like a local SA money, right?
This is for local SA money. Yeah, that would be invested into retirement assets. So, for example, if you're contributing towards a preservation fund at this point in time via your South African employer, your assets would be invested under Regulation 28. If you have a retirement annuity within South Africa, you would have to adhere to Regulation 28. So this basically illustrates what we can do with those assets to make it work the best for you over time. Because fact of the matter is, we all start contributing to, preservation funds and retirement annuities and the like, from our 20s and 30s. Now, what that essentially means is that you've got more or less a 30-year time horizon, for these assets to really work for you. So you want to be invested, in the highest growth opportunities that are going to grow at the fastest pace over that time period. And as illustrated by the charts we showed earlier, you really want to be in as most businesses and equities as possible over the long run to give you the highest possible return.
Yeah, I mean, the history shows that
we,
the offshore equity is the way to go, right? Especially if we've got shorter time horizons, which we all think we're bulletproof and never going to get old, but we're all getting old. Look, I'm already starting to go grey. Like, I don't know how that happened, but like, it's creeping up. It's catching up to us, right? So I think
that's
the
where
message
we
here
are.
is offshore equity is probably the way to go, and this is what's happening locally. What's happening offshore? So from the offshore point of view.
Okay, so from an offshore point of view, what we'll do is let's just touch on the retirement assets. Okay, so from a retirement point of view, you have a maximum allocation of 45% to global equities. Now, the point is most South African managers are not flexing that 45% to its maximum constraint. Okay, and what that essentially means is you don't have as much offshore exposure as you typically want. So what we do for you at Sanlam Private Wealth is we flex. We give you the maximum offshore exposure that you can possibly have. We give you the maximum equity exposure that you could possibly have to give you, that highest growth over time. So what we want to show is, what retirement assets can do over time. So if you have, let's say, a preservation fund portfolio, you're 35 years of age, you've got more or less $1 million that has been accumulated. If we assume no further contributions from this point on, all right, and for you guys, what real means is real basically means after inflation. So after inflation, if you had R1 million invested in pension assets, you could easily have, 3 million Rand by the time you retire at 60. If we take it into account, X inflation, that same R1 million turns into 6 million Rand, by the time you retire. So what we just want to say is, as you mentioned earlier, Frans, it's not timing the market, it's time in the market. And the time in the market, you really want to be allocated to what's working the best over the longest possible period, which is global equity.
Thanks for that, Jash. And then, Frans, to answer your question with regards to what are the global, what are the global equities, what are the businesses that we owning? Here is an illustration of the top 20 businesses. For the large majority, you will recognize a fair amount of them. Right at the top there is NVIDIA. So NVIDIA is certainly winning in terms of supplying what we refer to as the picks and the shovels into the AI space. There's massive spend coming out in that AI space. To give you an idea with regards to how large that spend is, it's already exceeding what took place with the spend going out on the internet development in the 2020s. This basket, I'll touch on some of these very briefly. NVIDIA, we've got there. Microsoft, also a big beneficiary of scaling out cloud and AI production. Apple, Amazon, so Amazon as well, spending hugely in terms of the actual physical now expansion of data centers. Meta Platforms, Facebook, got one of the largest clientele with regards to their business. Then you've got Alphabet, which is the renaming of Google. Tesla, so Tesla is you either like it or you don't. Our view is that we certainly don't think one wants to bet against Elon Musk. So behind Tesla, the big thing that's going to be rolled out over time is robots. Berkshire Hathaway, which is Warren Buffett's business there. And then I think the last one I'll mention and touch on there is Netflix. So we've seen when Netflix IPO'd, it was literally the top of the market for what's that old business called where it used to stream Broadway or Broadbox or whatever. Blockbuster. There we go. Thank you, Yash. So if you look at when Netflix IPO'd and you have a look at when Blockbusters peaked, that's exactly right at the top of the market there. So a lot of businesses, yeah, they're on the front foot, scaling, lots of growth. And I think, France, you mentioned with regards to the international equities, I touched on earlier saying how small the JSE is, but what you've got here, you've got exposure to businesses globally that are just growing phenomenally quickly. And unlike the JSE, you just can't get exposure to some of these bigger growth businesses.
Okay, right. So we've touched on what's available, in the global equity market. As mentioned by Guy, you will be invested in the best and brightest and biggest companies available to us at this point in time. So yeah, it definitely is an opportunity to be taken advantage of. What we also have come to acknowledge is that, you may have cash sitting in various currencies over the world, right? So some of you may earn in dollars, some of you may earn in pounds, in euros, etc. And what we really want to illustrate is that, that money needs to be working for you to the best possible way. So what we have is, because we're one of the largest institutions, we have access to institutional money market rates. Now, what that essentially means is that your cash offshore can be deposited in hard currency directly to your account at Sanlam Private Wealth. That fund can then be invested in one of these money markets that we have access to. What you can see is the current interest rates being provided. I mean, being offered 4.4% on dollars. I mean, that is the highest rate that you are going to get for cash. 2% for euros, 4.3% for pounds. These are quite attractive rates. And I think it's also important to note that, these funds are available at any point in time. There's no lockup periods and the like. So you really get to, if you don't want to bring funds back into South Africa, you can simply just deposit hard currency into your Sanlam Private Wealth account and these interest rates. And at such a point that you need the funds, these funds can either be invested into the global markets as illustrated, or they can be paid back into your offshore bank accounts, whatever works
Yes,
for
thanks
you.
for that, Josh. And then just adding on to that from a tax perspective. So these investments, so if we select to reinvest the interest, which we typically do and would advise that one does. So if we reinvest the interest, SARS does not tax you on that interest that is reinvested. They only tax you on a capital gain only once you actually exit and sell out of the investment. The capital gain, so technical point, but the capital gain is treated in the hard currency perspective. So as an example, if you invested $100 and that $100 turned into $104, you would only pay a capital gain on that 4.4%. If the rand weakened by 10%, 20%, you are not paying capital gains on the currency weakness, the rand currency weakness, which is an extremely big point to note. So to wrap up on this, hard currency interest rates, reinvest the capital, delay the tax event by just reinvesting and deferring tax and growing the wealth. As Yash said, is deploy it from that into the international basket of equities.
Okay, and then just to wrap this up, in terms of Sanlam Private Wealth, right, we just want to touch on again. Sanlam Private Wealth is one of the largest institutions in South Africa. Between Guy and myself, we are the best and brightest that you're going to get. Working alongside France, you can be confident that, your assets will be managed in the best possible way. We will get you exposure to the best companies in the world and really ensure, that your funds beat inflation and grow to the best over time. And yeah, I think, Guy, you can close up as well.
So to close up here, so thank you, France, for inviting us and sharing our views with your clients. And then the last point that I'd like to make on this slide here is that this is a partnership. It's a test match. It's not a T20. Generating and building wealth takes time, but use the power of compounding as a tool to lever in your advantage. Don't allow inflation to get the better of you. Buy into businesses and use that to not only stay at pace, but actually get ahead of the curve. front.
Perfect.
Thank you
Yeah,
for
thanks,
today's
gents.
session.
That was great. I think nice, short and sweet. I think everyone got something out of it. And it just kind of, hammers the point across that we're trying to get across with Captain Circle. Is the only way, guys, to really do it is through business. So either we're going to use this kind of vehicle, invest your money into businesses, invest it offshore, invest it into hard currency, and then deploy it into, buying businesses. But everything really happens in that space. History has shown us. Thanks, guys. A lot of clarity on these topics. Practically, it's pretty easy to do. You guys can just reach out to me if you want to open any of these offshore accounts or really want to just chat about investing. Doesn't matter if you've got capital already or if you're really just starting out. Most probably a combination of the two. And we can also talk about how potentially to get some of your money in South Africa out. Thanks, guys. Appreciate your time. Thank you, everyone, for watching. I hope you got some value, and reach out to me. We're always happy to help.
Okay. Thank you so
Grant.
much, Ross,
Take
for the
care.
opportunity, and hope we see you guys soon.
Cheers, gents.
Cheers.